continue with much of the conversation today, and as was highlighted, the last 10 years has been an interesting one. I guess how many of us might have viewed the investment agenda on the African continent has changed, shifted, and even maybe dented our confidence slightly. But as has been mentioned by Adam, we still remain resilient and committed to the African continent. Now, given that the API Summit has been running over the last 10 years and has certainly seen changes in engagement with participation from the Francophone states, West Africa and East Africa property summits, we are going to get an overview of some of the highlights that they've certainly experienced and shared over the last decade. So in order for us to have a view of this, please warmly welcome to the front of the stage the Managing Director of API Events, Kafir Russin.
Good morning, and a big Joburg welcome to all of you here today, especially those who have traveled from Africa and abroad to be with us here this week. You all represent the past, present, and future of African real estate. For those of you who don't know me personally, I'm an Afro-optimist, which I think is a trait that all of us here today share. Firstly, I would like to give a big round of thanks to our sponsors, some of whom who have been with us since day one and have helped us grow the impact and role of the summit over the years. Without your continued support and thought leadership, we would not have been able to fulfill our mission of driving investment and development into Africa's emerging real estate markets. On that note, I would like to give a special mention to Grit, our platinum sponsor, and Standard Bank, our gold sponsors, for this, our 10th annual API Summit. Our role as hosts is to provide a platform that highlights the opportunities, progress, and challenges within our industry, and most importantly, helps you to do better business in Africa. To that end, my presentation this morning aids in identifying and charting where we have come from, where we are currently, and perhaps where we are headed. Okay. Since 2010, our mandate has been to enhance market transparency, drive investment, and connect property stakeholders, both local and international, across the real estate value chain. During this period, we have noted significant progress in market formalization, local sophistication, and a deeper understanding of market fundamentals and true demand. These markets have enabled us, or the growth in these markets, have enabled us to grow into a Pan-African business that today hosts real estate-focused forums in Johannesburg, Lagos, Nairobi, Abidjan, Maputo, Gaborone, Lusaka, and Harare, among others. This growth is proof that these markets are growing and maturing, each, however, in their own fashion and at their own pace. As an industry, we can attest to the fact that the journey over the past decade has not been a linear progression, nor smooth. However, we have seen the rise and completion of multiple developments, a steady increase in transaction activity, and the expansion into new real estate sectors, as well as increased stakeholder engagement. All of which indicate that the African real estate industry is vibrant and growing across all jurisdictions while increasing in volume and scale. Most importantly, stakeholders are now taking a longer-term view on their African businesses. Gone are the days of short, easy, and fast money. According to published and available data, we estimate that over $14.5 billion has been raised and deployed into African real estate and housing over the last decade. The biggest question now, facing all stakeholders and investors, is where are we in the cycle, and is it the right time to invest? For our money, we have highlighted 3 distinct phases which illustrate the different investment and development cycles over the past decade and looking into the future. This slide, or this graph, was referenced from a Dr. Rodriguez who actually presented at API Summit, I think in 2010. These 3 phases can be characterized as follows. The early money phase, which ended in 2016 during the commodity crash, and was characterized by the formation of generalist PE real estate funds, South African developers, as well as investors such as global DFIs. This phase saw a core focus on the development of A-grade offices, large-scale retail malls, and high-end residential units. The second phase, or the maturity phase, which we are currently still going through, can be characterized by a market and pricing correction, the sale and acquisition of assets developed during the first phase, and the emergence of investment and development funds focused on specific real estate asset classes. Also, we are seeing the exit of certain pioneering funds. The next cycle, or the institutional and public investment phase, we believe, will be driven by further market consolidation, which in turn will create greater liquidity and ultimately provide the path for large-scale public and institutional investment into the sector. This may take the form of REITs and other public investment vehicles, but most importantly, will be funded by more patient and longer-term capital. To give further clarity to Phase 1 and showcase how much has been done and achieved to date, we have highlighted some notable investments and developments during this phase. In West Africa, we have seen the development of Accra, West Hill and Achimota malls, as well as One Airport Square and Stanbic Heights office developments in Ghana. Whilst in Nigeria, we have seen the development of Ikeja City, Lekki and Gateway malls, as well as Landmark House and the Wings office complexes, among others. These West African developments and investments were driven by the likes of RMB Westport, Actis, Novare, Africa Capital Alliance, Landmark, At Africa, as well as certain early stage financiers such as CDC, IFC, Grosvenor, GIC, and OPIC. In East Africa, we have seen the development of Two Rivers, Village Market, and Garden City malls, among others, in Nairobi, as well as notable developments such as Delta and UAP Towers. In Rwanda, Tanzania, and Uganda, we have seen a steady increase in the developments with the likes of Kigali Heights, Milimani City, and Acacia Mall, all being completed during this phase respectively. Notable East African developers and investors include Centum, Old Mutual, AMS Properties, Fusion Capital, Actis, Green Hills, to name a few. Moving on to the SADC region and Mauritius, we have seen the development of Kafuba, East Park, and Manda Hill malls, as well as Roma Park in Zambia, and notable projects including Prime Plaza, Airport Junction, and Massa Square, among others, in Botswana. Whilst in Mozambique and Mauritius, we have seen key developments such as the Jat office complexes and the Vodacom, KPMG, and Hollard buildings in Maputo, as well as Barclays House and Bagatelle Mall in Mauritius. And whilst the performance of all these pioneering assets have been mixed with some developments exceeding expectations, others have had to adjust to tough trading environments. Further to this, some of these assets are currently being sold or have been sold. Nonetheless, they have all been critical in driving market formalization and development, as well as ultimately providing the basis for current and future investment cycles. These projects also highlight the amount of development that has taken place over this period and across the continent by stakeholders here today. Moving on to the next phase, the one that we're currently in. Over the last 24 months, we have begun to see a number of fund exits and the disposing of prime investment grade assets. This is resulting in greater liquidity and improved transparency in the market. The continued acquisitions from Grit and the formation of GAP are key examples of this trend. We believe this consolidation will continue, with more investment grade stock becoming available at more realistic and market-related prices. The second phase has also given rise to the development of specialized investment platforms focused on specific real estate asset classes. Some examples of this include warehousing and industrial funds such as ALP, Agility, Impact, and Black Ivy. On the hospitality side, we have seen the formation of Westmont Hospitality, as well as the Casada and Katara funds, who just jointly raised over $1 billion for hotel investment and development on the continent. On the housing and residential end, we have seen the expansion of IHS onto the continent, the rapid growth of Acorn's student housing platform in Kenya, as well as the recently announced JV and Housing Development Fund between Chapochi Pelonji and Actis. Finally, and fueled by the previous two stages, we believe the next cycle will result in further market consolidation, allowing for enough scale and liquidity to open up public and institutional investment. We also anticipate greater funding and development of large-scale affordable housing projects, convenience retail malls, healthcare facilities, hospitality assets, and student housing, all backed by longer-term capital providers such as pension and insurance funds. This phase will also likely lead to the establishment of proper capital and REIT markets in countries such as Kenya, Ghana, and Nigeria. So, in summary, what does this all mean? If you look at the path of African real estate over the past 10 years, it strongly resembles that of global investment cycles. We have seen euphoria and consolidation, but most importantly, we have set a firm base for the future. At API, we look forward to the next 10 years of growth with all the stakeholders and new stakeholders in this room today. Thank you.